YouTube, what's up, y'all? So I wanted to come to y'all and basically make a part two to the video I had made previously. So it's been a couple days since we've been in this trade, and so today's video is pretty much expounding or basically building on the video previously that I dropped, where I break down the strategy. So I wanted to come today and share with you all how you would exit the trade if it doesn't hit your take profit. So anyway, again, my name is Penny to Dollar FX. What I do is I'm a day trader, and what I do is I show people how to day trade using the strategies or the methods that I use, looking at the charts, analyzing the charts, gauging entries and exits in the market. All right, so we trade all markets around here. We trade crypto, we trade indices, we trade forex, we trade them all. We trade oil, we trade commodities, we trade everything. All right, so here we are. I'm going to make this video very brief, very short. But here we are. We're looking at the U.S. oil. All right, it's up here in this left-hand corner. You can see right here where it's a symbol search. All right, U.S. oil. And right here, this is crude oil. All right, we're looking at it on the 1 hour chart. And right here, as you can see, I was in this trade for the short position. As you can see right here, lined up down here, this purple and gold box down here. All right, the purple will always be representative of my risk. It would always represent or demonstrate the risk box, right? And the gold is always your take profit. I'm a Laker fan, I say. All right, so anyway, with that being said, you can see I had taken this trade. It's in the premium up here, and I had taken this trade for the short. Once it crossed over down below the gold line, start trading below it, I taken it for the short. All right, so the only time you would get out if it doesn't hit your take profit, and that's what makes this strategy so phenomenal, because the only time you would get out this trade if it doesn't hit your take profit is when it crosses back over. So in this instance right here, it crossed back over and it hit my stop loss. So this trade right here, this very first one would have been L. All right, this whole setup would have been an L. All right. And the reason what I mean it would have been an L is because it never hit my take profit. It never hit my take profit. And so because it never hit my take profit, yeah, you would have basically lost some right here. You would have lost some money right here. I'm just being honest with you all. You would have lost some dough right here. All right. However, what happens is once it starts to break back over, you have one or two options. All right, so you can get out the trade and wait for the trade to go back in the higher probability zone, which is coming back down in the discount where price starts trading above the gold line, or you can get in on the entry going long from where it is right now. So where it is right now, it's sitting right at the equilibrium. It's sitting just above the equilibrium where it started to trade over the gold line, and that's where I got back in at. And so right now I'm up. If you don't understand how percentages work on money, let's just say, looking at this lot size right here. Now this is just a demonstration, but looking at this lot size right here, what that equates to, if you come down here, that equates to that much in dollars. All right, so this just gives you an idea. So please don't get carried away looking at this. Don't get carried away thinking this is real money. But what I'm saying, the point that I'm trying to truly make here is 1.31% on this amount of money is substantially a lot. All right, that's all I'm trying to, that's the real greater point that I'm trying to make. As you can see right here, it says down here, it offers you the whole details on this position. This is the asset over here to the left. This is my position, right? I'm in the long position. This is basically what you would consider your volume or your lot size. So it's showing, this is the quantity right here in not in MetaTrader, but in TradingView, this is the quantity. All right, this is the average fill price, my take profit level. So this is all information that I put in. This is the take profit level, which is up here in the green tab. I don't currently have my stop loss listed here, but let's put my stop loss out here, and that would also be illustrated down there. That's my stop loss. You see how it popped up? That's the stop loss. And then this right here is the last price. All right, so I'm not one to show a whole bunch of money because it's not about the money. It truly is about the strategy. When you learn the strategy, the money is simply a variable. You got to get used to reading these percents. You got to get used to reading these percentages, all right? Plus, I just don't want people counting my pockets. All right, but look, understandably, 1.32% is a substantial amount of money on this lot size. All right, so that gives you just kind of an idea, like big banks and other institutions like hedge funds, when they're playing around with these types of lot sizes, that gives you an idea the amount of money that they're making. All right, so anyway, what we wanted to illustrate here is once price crossed back over, all right, and it started trading above the goal line, then and only then will we get back in it for the long. And so that's where we at right now. Now, if it doesn't hit my take profit, which is up here, and it starts trading back below the yellow line, then of course I would exit the trade. And usually what I do is I try 2 times. I'll try 2 times in a 24-hour period, right? If it starts going up and down, up and over, in other words, if it starts doing this another time, I'll get out and I won't trade this asset for 24 hours. I'll come back and look at it tomorrow. All right. And that's just me though. You have to have like some type of discipline. You have to have some type of practice. And so for me, because I've already taken an L on it already once, not a lot, but I took an L on it. All right. So that right there was enough. All right. One time. And then I got back in it for the long. So again, if it doesn't hit my take profit, then I'll get out. I'll get out and I won't try to or attempt to trade it again until tomorrow or until I see another setup. All right. Which will be after 24 hours. All right. So anyway, Aussie 200, let's take a look at it. All right. Same thing right now. What we see here, if you take all these off, what we see here is we see price, being down in the discounted zone. As you can see, we're down in this discounted zone, right? But we still haven't hit our take profit, and our take profit being down here. So what we're looking for at this point, because right now we're sitting in some substantial amount of profit. I don't know if you know, but we're heavy in the gold down here, and that's what you want. So basically, we're already like 2 times the amount of risk. We've already made up for what we had already put at risk anyway, times 2. I mean, that's literally where we're sitting. We're sitting down here in the deep gold. And so what I'm saying is the only reason, now you can take your profit. I'm not going to cap. You can sit here and say, you know what? It looks like it's going to reverse and you can get out. I'm not telling anybody to stay in if you don't feel comfortable staying in. But just for me, showing you how I trade and based on the principle and practice in which I apply to the market, I am not going to get back out of this trade until it crosses and starts trading or starts closing above this goal line. Then and only then will I get out. And so until then, you just kind of sandbag it. You just kind of sit in it, wait, and just kind of let it just keep playing out. All right. And we're sitting very well in profit right now. So it's a good look. All right. Next one is going to be German. What is this? The German 30. All right. Here's another one of my favorite assets. I love to trade. The indices, I really enjoy trading indices. I feel like indices, I feel like they tend to trend harder and they tend to trend further or faster. I don't know. It's just something that I've noticed. I don't know. I just love trading indices, right? Indexes or indices, however you prefer to refer to them as. But pretty much all they are your S&P 500, your NAS 100s, your US 30s. Those are all indices. They're not stocks, they're indices. And so I enjoy trading indices. So as we look at German 30 here, all right, which is the top 30 companies, right, in Germany, right? What we see is the same thing happening here as we saw previously with some of the other assets. We see that price has now reached this discounted zone because that's where we're at. You see down here, we're in this discounted zone. And this is where we use our price action, our price action analysis. All right, here's where you really want to employ that price action analysis that I speak of in one of my previous videos. Now, if we erase all these, I'm going to erase all these lines because I know it may be confusing some of you. I'm going to erase all these lines and I'm just going to show you. All right. First of all, there's 2 concepts that I like to introduce to you. Well, we'll just stick with the first one, but there's 2 concepts going on here. One is scaling, showing you how I scale into positions. In other words, scaling is just basically building on the position, adding to your position or adding more on your position so that you can stand to earn more. And so as you can see right here, I got in right here, back on this first position up here, and then I got in again down here on the second position down here. All right. But that's neither here or there. I can focus on that on another video. I don't want to like confuse anyone. But just for the sake of this video, just understand that I took the first initial trade here with a 3-to-1 ratio. All right, once this red candle broke underneath this gold line and we started trading underneath that, I cleaned up on that, trading 1%. And then the next concept or the next idea, if you were practicing, I want you to take a look at here is this. All right, look, we're in this discounted zone down here. This is the discounted zone. As you can see, price has now reached this zone down here, this area down here. All right, and this is what we call our discount. And so anytime we come down to our discount, as I mentioned in a previous video, when we come down to the discounted zone, we should be looking for long trades. Well, now that we're in this discounted zone, right? Now you want to try and you want to employ or you want to apply your price action analysis. And if you know anything about my price action analysis, I look for 3 styles of candles. I only look for 3 styles of candles in major zones. So in this down here in this discounted zone, I'm looking for an engulfing candle, which we have here. I'm looking for a hammer, right? Or I'm looking for a pin bar. All right. Now I know a lot of you don't know what that is yet, but if you stay tuned, you continue to like, comment, share, and subscribe to this information. I promise you I'm going to be making more and more videos to build on these concepts and ideas. But I look for those 3 styles of candles whenever we start to reach one of our zones. And as you can see right here, we just developed that price action candle formation, if you will. This candle right here, I know you can't probably tell because of my my indicators, but this candle right here, excuse me, this candle right here is a green candle. All right, let me all right. So the reason why it's showing it red is because one of the indicators, which is called the Vishnu that I use, is called the 5MS Vishnu. What it does is it shows the trend. It highlights momentum. And so that candle right here was illustrated red. So I had to take it off, blind it, so that you could see it in its proper formation and its proper color. It's a green engulfing candle. And what an engulfing candle simply means is an engulfing candle is a candle like this that is a high momentum base driven candle. It's a high momentum base developed candle. All right. So as you can see, this candle engulfs this candle. It engulfs this candle. Its price engulfs this candle. And it comes up and peaks like right into like maybe third or half of this candle. That's a substantial candle. All right. That's a very substantial candle. So you can't ignore that. And so what we have to do is we have to take notice to that and understand at this point, price is now telling us, because you got to remember up until that point, right? It was pretty much trading bearish. It was pretty much trading on a decline. But once this formation starts to form right here, now we understand price is now illustrating that it's either at a level where it's too low, right? It's too low in value, or it's at a level where hedge funds, banks, and other entities and countries and government agencies have decided to take an interest and buy it back up right here. Whatever the case may be, it could be any one of the scenarios earlier I listed. Whatever the case may be, the point is, it's not that it's reached this area. This is an area where buying interest, buying momentum is anticipated or expected to occur. Now, what that means is, I'm not going to get in. I'm not going to get in right here. You can be one of those aggressive traders and you can get in right here at this price level. You can get in at, what's that? 15,222.6. You can get in right there. Me, I'm not messing with it. Me, I'm going to get in when we start to see price trade up and above this gold line. And I need to see price break above this gold line and start trading, start forming candles above that, and then that's when I get in. But at this point, in other words, this line is going to continue to keep, remember, this line is a moving average. It's going to continue to keep plotting as price continues to keep going up. If it's really moving with momentum going up, it's going to keep plotting, coming down, right? Because it's got to meet price. It's going to come down. Either one or two things is going to happen. Either price is going to meet it or it's going to meet price. And what I mean is either it's going to continue to come down as price goes up, or price is going to continue to go up and break and start closing above it. All right, but that's how the moving average works. That's how we're looking or gauging off of price using it. And we simply want to see price start trading above it before we take an interest in the long position. And so that's how I'm trading it. Currently, I'm sitting very, very nicely in it. Sitting nicely in it, trading it. It actually, matter of fact, I'm capping because it already hit my take profit. So it hit my take profit over here. So I'm actually twice it already hit my take profit. So I'm actually just sitting out of the trade, waiting for another opportunity to get back in it. All right. So that's the German 30. Let's take a look at the JP 225. All right. So if we look at JP 225, we got pretty much the same thing going on. This is the one thing I enjoy about trading too. Once you really master trading, they all look the same. They all become, I think it just becomes a lot more easier to analyze and see what's in front of you. Like before, this used to be like a very windy road for me. This used to be very, very obscure. It was very difficult to make heads or tails of it. It was very difficult for me to identify and understand what was going on. All right, but anyway, I got in this trade once we started closing below it. Right, it closed above it. I didn't get in right there, but I got in right here, and then it got back underneath the goal line right here. And that's when I basically was like, okay, and it solidified my entry with this red candle that printed after it. So in case you didn't know, let me explain that too. This candle right here is actually a white candle. That is actually one of my red candles. All right, I know that's probably going to confuse some of you all, but basically on some of my charts, my white candles are my red candles and my green candles are my black candles. And I just made it that way because when I was first learning this, it made it easier for me to kind of just understand the flow of price movement. Because at the end of the day, you really don't care about green and red. You really don't care about bullish or bearish. Really, you should just be caring about highs and lows. And so, excuse me, having my candles colored in black and white made it easier for me to understand the flow of money. Really, I'm just being honest with you. So in this case right here, we still haven't hit our take profit. And so same thing going on right here with the JP 225. I'm simply either waiting for price to hit my take profit, or I'm simply waiting for price to get out. In order for me to get out, I'm simply waiting for price to start trading above this goal line. And at which point, if it starts trading above this goal line, then I'll just take whatever profit it gives me. But the thing is we're looking for the reverse trend trade. All right, we're looking for the trade that reverses, and we want to trade with the momentum. All right, and so this is just another setup of how price is trading as it relates to this 200 moving average. This is just another setup showing you. All right, once we get up here, right, I want to see price break and close above. I want to see price break and close above this yellow line, start trading above this yellow line. Once that happens, right? Once that happens, I'm looking for the opportunity to get in for the long. All right, we'll close this short position that we're currently in. All right, and then I would be looking to get in for the long position. All right, NAS, same thing. US 30, same thing. S&P 500, same thing. All right, again, this is Penny the Dollar FX. I want to tell everybody thanks, and I appreciate all the love and support, all the comments that I've been getting. Till next time, peace and love, y'all.